We're talking about your money, and could the Dow Jones Industrial Average reach 25,000? Stewart Welch from the Welch Group joins us to explain. You know, I know it's a big mistake to try to guess this stuff, but it certainly seems the way that the trend is happening that it's within reason.
It is within reason. Actually, Mike, the big question I'm getting now is the market looks like it's fully valued or overvalued, depending on who you talk to. When are we going to have a big correction?
Right.
And the short answer is, I don't know. And here's the important part of that. Neither does anybody else. You know, I've been doing this 30, 40 years.
Right.
I've never found that one person who can correctly call it consistently over and over. So you cannot predict that.
Okay, but if it does keep trending upward, or if it does have a correction, tell the folks why it matters to them.
Well, I think it probably doesn't matter. Okay. If you're dependent on the time frame in which you plan to be invested. So if you plan to be invested long term, then I think a stock market drop is of little importance to you. Mm-hmm. So I think where it matters is if you're actually taking money out of the portfolio in order to pay for living expenses, then that matters. And for those people that are doing that, they're going to need reserves. Okay. So the question is, how much reserves? Yeah,
because put that in perspective, because when you're talking about leveraging yourself against a big correction, depending again on where you are, your age, and what you're trying to do for retirement, give us some historical perspective here.
So great history. If you looked at the last two super bear markets, that would have been the market of 2000 and the market of 2008. Mm-hmm. One of them was down about 30%, the other one was down 50%. How long did it take for them to get fully recovered? And it was somewhere between 50 months and 60 months. So if you said, but these are the two worst bear markets, two of the three worst bear markets in the history of the stock market. So if you said, how much should I have in reserve to be sure I have time for the market to fully recover so I don't have to go in and sell stocks in order to raise money, that'd be about 60 months.
I know this is a terrible hypothetical question I'm going to ask you here, but let's just say if you're in a situation where you've got a lot of money in the stock market, you don't have a lot in cash reserves, if say you're 50, 60, should you start just to be safe, putting a lot more in that area?
Well, I think that you always ought to have some money in cash reserves. That's for things that are unexpected. And for every person, that's going to be a different number. So if you're taking cash flow out of a portfolio, you want to think of that in terms of years. And in that case, maybe up to 5 years. But generally, you want to have personal reserves, and that is a personal number. And then if you're, you want to have separate money invested in things like CDs and money markets and bonds to buffer the portfolio against a big stock market decline if you're taking money out.
All right, somebody sitting out there with just maybe, you know, $1,500 right now saying, hey, should I play the stock market right now? Yes or no?
Yes, I think yes if they're in there for the long term.
All right, thank you very much, Stewart.
Thanks, Mike.
All right, before you use all